The ETF I want to talk about today is already up 120+% in about 2 years, a little over 2 years actually, a phenomenal return. If you guys are familiar with round hill ETFs, their ticker MAGS or MAGS has been one of the top performers that I've seen and their most popular ETF by far with a multi-billion-dollar market cap. I really do like MAGS. We're going to go over the 7 underlying stocks, compare them, and talk about this ETF in this video. I'm really excited. MAGS does not pay a dividend and is a simple growth play, but it's always good to have some nice diversification, and I will be adding MAGS to my portfolio very, very soon. There are a few things about this ETF that we need to discuss, and even a 2x leverage position on MAGS called MAGX that I think might be interesting for those higher risk investors. If you guys are interested in ETFs, in stocks, in dividends, you are in the right place. Don't forget to like the video and to subscribe so you never miss future content on what's making people the most money in this crazy stock market. Let's roll the intro. The Magnificent 7 ETF is focused on the Magnificent 7 stocks, of course, the leaders shaping the future and driving innovation in the tech sector. You could look at it almost like a riskier NASDAQ 100 even, because you only have those 7 underlying stocks. Now, these underlying stocks have phenomenal performances, but because there is only 7, you're just going to have a little bit of higher risk. But if you haven't checked out Roundhill's website, I do recommend it. The overview of this ETF, it's just going to track those Magnificent 7. It offers pure exposure to the Magnificent 7 stocks. It's designed with both investors and traders in mind, seeking to offer similar tax efficiency to a traditionally managed ETF. And it's rebalanced to equal weight on a quarterly basis, ensuring consistent exposure to the Magnificent 7 stocks in a single ticker. If you don't understand what that meant, what that means is they buy or sell more to make sure all 7 are equally distributed in the ETF. And they do that on a quarterly basis or 4 times every single year. The expense ratio is a little bit high at 0.29%. Not terrible. It's not a really actively managed fund, I would say, so it's a little bit high in my opinion, but the AUM of 2.37 billion is pretty solid. So you could go through and track all of these. I'm going to call them out right now. We have Nvidia, we have Alphabet or Google, you have Amazon, you have Apple, you have Meta, Microsoft, and last but not least, Tesla. Now, they're going to reweigh this again pretty soon. That's as of 7/6, which is 2 days from now. So I'm not sure why they're predicting that in the future, but you can always track the performance. And it has been very, very solid. You see market price growing over time. And I'm actually going to pull this up on Google so we can see the exact amount of money this has gone up. So if you had purchased on the inception day of April 14, 2023, we can see this thing has steadily climbed. Even with the market decline at the beginning of 2025, it did go down 24%, but has quickly already bounced back 35+%. Pretty solid, pretty phenomenal. I am really happy with the return of MAGS, but there's some caveats to that. It did have a bad pullback, and I was happy to see it come back to a good range. I wish I had bought shares at this low point, but I didn't. I was holding off, and I bought some other things. But I do like MAGS as a higher risk ETF play in my portfolio. There's even higher risk ones than this, like MAGX, that I will talk about in just a minute, but I want to compare the underlying stocks in MAGS, and let's see why the performance has been so amazing. One thing that is really important to note, I've got 5 of the 7 tracking right here. And so we can see, very interesting. Meta has been the top performer in the last year. Then you have Nvidia coming in second place. Then you have Amazon. And then the 2 trailing have been Google and Apple. And Apple took an absolute beating at the beginning of the year with the election results and with tariff news. Absolutely scared all of the investors. I believe it's down. I mean, it was down like 20 something plus %, which is not great to see. So I'm going to kick out we'll kick out our best performers with Meta and Nvidia, and we're going to add Microsoft and Tesla, and now we can compare these. So now Tesla is one of the better performers, although I think it did underperform Nvidia and Meta. But all in all, I do like these. I wish we didn't have to deal with Amazon falling and Google falling, but it is pretty amazing that despite those 2 having bad performances over the last year, MAGS is still doing so well. Now, if we go to the 5-year, we can see some insane increases. Amazon being one of the lower ones, Tesla is up almost 300%. Google's up 150, Amazon 50, Apple 135, Microsoft 142. All in all, very, very solid. If we kick out a few of these and switch them back over, we add NVIDIA, we add Microsoft. NVIDIA is up 1,600%, totally fueling the push for MAGs, and it's outperforming everything. Tesla isn't even close, and it's the second best performer. Now, we don't know what it's going to do in the future, as always, but I do think it's really interesting seeing these numbers. And I like MAGs. I almost wish you could kick out some of the worst performers and have it trade on somewhat momentum. But there is an ETF that does that. I have a video on it called SPMO. It's momentum-based growth ETF, and it's really, really interesting. I do own that one as well. But all in all, MAGs has been pretty solid. I think that all the underlying have room to grow quite a bit. We'll probably see lower growth from Apple and maybe even Amazon. They're just so large. Tesla is very sporadic all over the place, but it has some pretty solid returns as well. And NVIDIA, if it can keep doing what it's doing, it would be remarkable. I don't think we're going to see those crazy of numbers. I don't think it's going to go up another near 1,600% in the next 5 years, but I think it will do well. It's probably slowing down. The market cap is getting huge. But again, I am a fan of all of these underlyings. So even though it is a little bit riskier, you have some solidarity in the fact that these are large companies. They're large, well-known household names. So you're less likely to see one drop by 30, 40, 50% even, which does play into MAGX with the leverage. So let's talk about that fund next. For those who are okay with some more risk, we have MAGX. It's just simple, a 2x long Magnificent 7 ETF. Same 7 underlying and same premise, but just double the fun and double the risk. Now, I will say there's a couple things very important about MAGX. Leverage can be a very scary thing. I've heard horror stories of people destroying their accounts with leverage ETFs because if any of these stocks were to fall, to lose all of your initial investment, we would need these to fall by what? 100%. They would all be at zero, which is very unlikely to happen. But with the 2x leverage, they only have to fall by around 50% to make that happen. And so that's where it really does get scary because it is possible. Now, I don't think any of these are going to fall by 50%, and I definitely don't think we'll see all of them accumulate a 50% loss averaged out, but stranger things have happened. So the leverage is not for most people, and I understand that. It also isn't exactly a 2x. Meaning it is called a 2x, but you're going to pay more in fees, amongst other things, more in taxes. So you do have to kind of factor that in when you're thinking of the risk. So you're not exactly going to get 100% more. I'd probably say it's probably around 80% more. And so it's not exactly a 1-for-1. The expense ratio is higher, almost a full percent. It's almost 3 times what we saw with just MAGs. Now that's expected, but not very great, right? You don't want to have more money taken out. It's a bit of a bummer, as well as the AUM is a bit lower, 75, almost $76 million, not close to the multi-billion that we see with MAGs. And all that says is people seem to like the underlying. It's just more popular, and people really don't like leverage all that much. I would definitely say a lot of growth investors are not as interested in leverage, and I'm not either. I don't invest with leverage typically, and so I do like some lower leverage funds, like maybe a 1.2x on some of my favorite single stock ETFs, but those are very risky as well. So what we're going to do is look at a drip calculator and see how these two have compared since the inception of MAGX. It did come later than MAGs, but we'll pull up that chart and see exactly what is making the most money. This drip calculator pulls all the data from the first day of trading on one of the ETFs, meaning MAGS has traded for longer, but in order to relate them to each other, the same time period must go for both. So we're tracking both of them since February, late February of 2024. And we can see MAGX has outperformed. It's not an exact 2x, but it's pretty solid. So with dividends reinvested, but although it doesn't pay much in dividends, we can see MAGS would pay you 47.5% as your total return. That's what you've made. I shouldn't say it pays you. That's your total return. MAGX is sitting at a 68.51% return. Very, very interesting. One thing to note as well, we can see when the market was doing really well, MAGX was significantly outperforming MAGS. But when it dropped, it fell a lot harder and even a lot faster, which we don't love to see. Now that the market is rebounding, it is moving back up. So what I'm debating doing is doing maybe like an 80-20 position where I have 80% MAGS, 20% MAGX, and I track and follow it. One thing Roundhill does have on their website is that this MAGX specifically is for active investors. It isn't necessarily something you hold for a long period of time. If you think that we're going into a bear market, if you see a downturn in the market on its way, whether it be tariff news or who knows, that is when you would basically pull out of the fund. And they kind of list that on the website. It's not simple, just an average one that you buy and forget. It's more of an active investor based ETF. So all in all, it is very, very impressive. With MAGS, if you had invested that $10,000 in 2024, February of 2024 to be exact, you would be at $14,750 for a near $5,000 return. With MAGX, your 10K would be worth $16,851 for a near $7,000 total return. So there is a bit of a difference there, and it is really impressive what both of these funds are doing. And I'm really excited. I hope that if we see Apple bounce back, these can perform really, really well and make investors a lot of money. I don't own either of these yet. I'll be really transparent with you guys, but I am planning on buying some just for the growth aspect, because it is really fun to watch them and to track them. So if you guys like this video, you're probably going to like these that are popping up on your screen right now. So I guarantee, check those out. Let me know what you think in the comments. And as always, don't forget to like and subscribe if you like free investing content. Thanks so much for watching. I hope to see you in the next video.